yeah, just a few things I wanted to share. Just to highlight potentially, a bit, rather, I would say this is a significant shakeup in the industry, guys. You guys all hear that Vantage Score now will be an acceptable model in lieu of FICO. You guys all hear that? I mean, I don't know why it's doing it like this. Sorry, let me see. My apologies. I don't know why it's only getting the middle of it. Here it is. Vantage FHFA to accept Vantage Scores loans immediately. Now, do keep in mind this is not every lender. I think right now I think in the article it says there was about maybe 20 or so, give or take, that's accepting the Vantage Score. So do you guys all know what Vantage Score is exactly? Yeah. Okay, it's basically a different model, an alternative model to the FICO that we have, the tri-merge that we currently use in the mortgage industry. Vantage 4.0 will consider things like expenses, reoccurring expenses like rent, utilities, telephone bills, cell phone bills, internet, et cetera, to be factored into the scoring. It is to look at not an immediate snapshot of what your client situation is, but to look back 2 years and to look at trends. Now, will this give you a bit better score, lower score? Not necessarily, right? What the true advantage of Vantage Score is really that it's going to help bring in many more potential borrowers into the mortgage space. Okay, guys? That's all it's going to really that's essentially what it's going to do, because you and I know there are many clients that come across your board, such as especially when it comes to DAP programs or FHA, where we have scores in the high fives or mid fives or really low sixes. But hey, they'll probably make their rent payment on time, right? And the cell phone payment on time. That might just be enough to allow their FICO scores their scores to be a little bit more acceptable for them to get into a program. Now, a second thing to note on Vantage Score is that the cost will be significantly reduced, right? So right now, there are lenders on average probably charging somewhere between $100 plus to north of $180. They are expecting that this model should be less than even half of that cost. Okay, so that's number one. During this time, as we have seen some relaxation in compliance and regulations here, do expect to see when they say CFPB, guys, really it's audit. Okay, it's looking into RESPA, TILA, it's looking into compliance and to see if brokers are doing what they should be doing. Okay, so right now we have reached a bit of what they would call a wild west effect. Okay, with DSCR, with especially as non-QM, the rise of non-QM really is causing some of the wild west to come back. Okay, but with the banks entering back in and the push for banks, that's what's going to be another one here. Kind of highlighted like this. We've seen this, and if you don't do it right, you end up like Wells Fargo. This one really hits home for me and C here, because C and I, we started at Wells Fargo, actually. That's our history. And we were literally in the thick of all this compliance issue. And we were in the very beginning of the exit of Wells Fargo. So we got to see that transition, guys. It's very real. Okay. And so, we will, with the banks coming back, there's something called Basel III. It's a rule pertaining specifically to compliance and regulations for the bank specifically. Okay. And the talk about it is to relax the guidelines a little bit more so the banks can come back into lending space. Guys, that's not necessarily, I mean, take it how you will. For me, I'm just going to chalk it up to, it just means more competition for us, guys. If you think it's hard now, it will probably get a little bit more harder when banks start coming in, okay? Because they have a lot of, liquidity that they can use to create jumbo programs and do seasonal rate changes, improvements on their on conventional loans. So you guys have to be on top, okay, top of your game as that enters. Finally, there's just really one more thing I wanted to share. Oh, two more really quickly, guys. I have experienced this firsthand, okay? I am not saying that AI is bad, okay? I am not saying that you shouldn't use AI, but, okay, you do have to understand there is a bit of a warning of caution. When you do use AI, don't think it's the end-all be-all. You guys do understand AI, really goes into the web and tries to, filter the response and obtain the response from the web. But what if it's a little bit outdated, right? So you may not get something that's accurate, okay? So I just want to, make that a note. It's great that, this, there was an article on this because very recently through Rocket Mortgage, I learned that a response through AI was incorrect. And actually, we're going to get into that with the loan scenarios today. That was it. So do you guys have any thoughts or questions regarding what I just shared?
Hey Rob, I know you I know you do a lot of research with current news. Just out of curiosity, for that new Vantage Score, because it's using non-traditional accounts to determine the FICO score, are we going to have to start hitting the borrowers for those non-traditional accounts? Like, for example, are we going to start accounting, the Verizon monthly bill as a debt now because it's on the report? That's a great
question, and the answer is no.
Okay.
Yeah, not yet. Now, again, with the Vantage Score, there are some lenders. I know a counterpart that I'm at a preferred lender with, companies called Guild Mortgage. They're going to adopt Vantage Score right away. Okay, so it's not prevalent. It's not everywhere. There's going to be some implementation right now. The big thing right now is the brokers now have to create two pricing models, right? One for FICO, one for Vantage 4.0. Obviously, for them, it's to monitor, right, what the rate sheets look like comparing side by side. So, the implementation, obviously, you guys all know this, right? You can have a grand plan, but really it comes down to the implementation, and that can take time, right, as it will. So, but be aware that it's going to be an option. I think it will be good for us at GivingTree to know what lenders that we work with who will offer that, especially because of the pricing model, right? There was actually in that article they showed an LE where some lender charged like $650 for a credit report. I actually seen one recently for like $300. Yeah.